Well, hello, welcome to Todd Miller TV. I'm joined here with one of the professional real estate agents here at the company, Sherwin Escanuela. How are you, Sherwin?
Good, thank you very much.
So, Sherwin, you work with a lot of buyers, especially a lot of investors, and I get the question all the time, especially when I hear how bad the real estate market is.
Yeah.
Why would an investor come to Las Vegas? And apparently you've got answers for us.
Well, it's not why would they, it's why are they coming to Vegas? They're coming, they're here. I mean, it's a huge amount. A couple years ago, a statistic came out that scared a lot of investors away, which is we were one of the most deserted towns in the country, which kind of hits you kind of hard. But those are all general numbers. They base it on vacancy rates, and as people are aware of condo hotels coming in, those are all vacant because they're being rented out on a daily basis.
Right.
But here's a number that came out for 2010, just a quick overview. It's a population update here in Las Vegas. According to this number, the most we've ever had was probably 2007, 2008 was when that number came in, and if you can see from the graph, we've actually had an increase in population since then.
So there's more people now than there were here 3 or 4 years ago.
Yeah,
they got to live somewhere.
Yes, exactly.
Okay.
According to this, this rough estimate, 2,036,358, which is approximately 30,011 more people than last year.
Okay.
So that means they're moving here, and therefore they got to live somewhere. People like walls and roofs.
And they're not building new houses.
No, they're not. They're not. I mean, there's some new homes being built, but for the most part, it's all in resale. That's
Okay.
all in the numbers.
So more people are coming in. So how does that work for an investor? How does that work?
Well, there's a couple of figures you look at. Obviously, with people coming in, they have to live somewhere. So your job is to basically find where the best cap rates are. Certain parts of town that are higher in price will get you a lower cap rate. Will give you a better back-end return, expected back-end return.
So what's a cap rate if they're not an investor currently, they don't understand that number?
Cap rate is basically the percentage you're making on your money. Now, there's a couple ways to calculate cap rate. There's cash on cash return.
Okay.
There is obviously the IRRs, which is your investment rate of return based on the 25 or 30% down payment.
Okay.
The returns. Now, here's a nice little number came up between, it says cap rates on sold homes with tenants, October to December 2010. You see the colors there to make it nice and simple is the outer parts, which is what you consider to be like these are the Summerlins, the Anthems, and the McDonald Highlands and things like that. They have a tendency to have a lower cap rate, lower return on your money, between 4 to 7. The reason for that is obviously higher taxes, higher HOAs will cut right into your profits.
Okay.
Whereas where you're looking into more of the Central Vegas part, these are where you're going to find those $50,000 to $80,000 homes, where you're going to get a rental return between probably $850 to $1,000. Again, it all varies on what numbers you're looking at, and your returns are going to go between 11 to 16% on those parts of town.
So 15%. So if I had 80 grand, I could potentially get a 15% return on that money like right away.
Yes, you can. Now it's not obviously we gotta diversify for the most part. I mean, you can go either picking up a couple of condos and get a rental, $35,000 to $40,000 condo with a return of $650 to $7, making sure that you're not paying that $250 a month of HOA. You got to be very particular. If you want a high return, you've got to be careful. You got to calculate your taxes, HOAs, what part of town it's in. But at 15 to 16% return, I do tell my investors that you're probably not going to get much on the back end. In other words, that $80,000 house is not going to sell for $200,000. Later down the line, your return up front is where you're going to get most of your money from.
Okay, so is there sort of like a target, like a sweet spot, like for where you should be, what the best property investment is?
Actually, yeah, I have a number for that. Of course, most investors like it because everything can be backed up. Here's what they call a sweet spot for cap rates. We got it from the MLS. It's a quarter 2010. Sold rental homes. Basically, what it does there is shows you as you spend more on a house, obviously your cap rate goes down because you cannot get the rental return that you're expecting. So the sweet spot is going to be right about here, around 10%. You're looking at about 100 to 110, and you can see there's a huge number right there where most of the 10% returns are coming in at. And that's why investors are coming in. With a 10% return coming back on your money, what's the bank giving you? So these numbers aren't like, we're not looking for a diamond in the rough here. We're not looking for a needle in a haystack. We're talking numbers that are dominant. They're there. There they are. They're not hard to find. You just got to find them and you calculate your numbers accordingly.
This is a lot of information, and if somebody wants to get like specifics on this or specific help, how do they get in touch with you?
Best way is to talk to me. As much as I like emails and everything, investors have different goals, long-term, short-term. Call me and I'll send you the right information. My phone number is 702-219-5582.
Awesome.
Thanks,
Well,
man. Appreciate the time.
Thanks for coming on. That was the update for today, and hope to see you on the next update.
Thank you.